So hello, everybody. This is Adrian speaking. It's what is it? The 14th of February, 2023, Valentine's Day indeed. I hope you're all fine and well. Little reminder for those of you that forgot about Valentine's Day. But anyway, what are we doing today? We're going to take a look at some of the opportunities setting up over tonight. We're going to look at those. We're going to look at some of the things that I'm thinking about ahead of those trading opportunities. The purpose of today's webinar is just to give some of you that are members a bit more information, but also those that are not members, a bit of an idea about the sort of the day-to-day routine, the day-to-day processes for Trendsignal members, looking at the Trendsignal Plus system. But we're also going to take a quick look at the Momentum Stocks system as well. There's a couple of stocks that are setting up also, so I think it's worth having a quick look at that. Hoping to get this done in around sort of 20 minutes, 30 minutes or so. But as ever, I always like to talk far too much, so I'll inevitably overrun as I tend to do, but I'll try and keep it as on point really as possible. Okay. So let's get started. Let's get on with the scan first of all. Now, what I'm looking at here, and you should be able to see my screen all okay, is the well, I'm looking at the euro against US dollar. This is the D1 sniper strategy. I'm going to run that scan now, which is this one here. And here's my list of markets. So mostly Forex, a few indices, a few commodities in there as well. And I'm going to look for trades that are setting up for today. Now, that will be a 1 in the look back. So how many bars you are looking back. We're only looking back 1 bar, which is today's bar. Hit search, and that will provide you with the output for there. So what we have here are 4 potential trading opportunities. I know that Aussie CAD's sort of flickering in and out of a potential trade at the moment, so we'll probably save that to last. Actually, we'll explain a bit more about that. It's sort of, as I said, it's right on the cusp of being a trade or not. But let's go straight in with having a look at euro against the yen. So when I click on that, it's going to change this chart on the right hand side. Now, euro yen has been a little bit choppy in the last few weeks. Some nice trades, in fairness, but I look back here, the shorts there, a couple of reasonable moves. What you're finding with this market is it really is stuck in quite a narrow range. So you're finding that the market's putting in a move, it's doing it in a day, and then it's kind of stopping and fizzling out. And you're looking here at the market stuck on that range, and we've got buying opportunities coming in right at those tops there. So this is something we need to think about. Let's have a look at where we are right now, and we can see the buying opportunity. Now, important to note that this is an end of day trading system, so typically we're looking at putting trades on in the evening. So myself, I tend to put them on under 9, half 9, something like that. 10 o'clock, 10 p.m. UK time, that's 5 p.m. Eastern, is when the daily chart is signaled or closes, shall we say. That is when indicators are locked against that close. So the way indicators work, they are based on what's happening with the candlestick. So whilst a candlestick is still being drawn, i.e. that day or 4-hour bar or 1-hour bar or 15-minute bar is still open, it's still moving, then the indicators associated with that are still subject to change. And it's not until 10 o'clock that candlestick is set, locked, and then cannot then move. And therefore, indicators against that, unless your indicators repaint, but really, which ours don't, then that is then set and locked at that point as well. That's why placing trades at half 12, like we are now, that's not when we want to be placing trades. We want to be looking at those in the evening. The idea of doing it now is just so people have got a little bit of something to do on their lunch break, maybe, if nothing else. So we're getting an idea, at least anyway, about trades that are setting up for this evening, that are members that I will be looking at trading as well. So what are we seeing here? Well, we're seeing that the market is starting to rotate higher. The line has turned from red to green, suggesting a turning point in play. What else can we see? This blue line here behind there, suggesting that the daily trend direction at this point is up. The MT suggests that the monthly trend is up, and we can also see with the line at the bottom there that the momentum is up as well. So there's a number of factors that are suggesting higher prices. Most importantly with that is that this pattern of those factors and a couple of other bits and pieces have a history of producing successful or winning trading opportunities. So they have a history of producing markets and trades that are more likely to go up than down. And that's important to know. And that's why it's identified or demonstrated with one of those discs that are on the chart. This move down, by contrast, was not a move that's associated with typically finding winning trades. So therefore there was no sniper disc here. What that basically gives us is a pretty rules-based, pretty straightforward potential trading opportunity. So we can then look at things like stop losses and targets, and let's just do that really quickly. So if I look at the TradeMate tool, select that one there. So select the today's bar. We've got the starter limits, which is what we're going to go for. Now, new members, they'd be going with the what we call the aggressive stop. Now, you can customize these tools as you become a bit more experienced. The target there, you can go with the starter limit. I'm going to set this at a risk of 2% of my account. So this is to do with the trade size. So you've got the stop loss there. This works out the trade size relative to 2% of your account risk, whatever your account size happens to be. Calculate trade details, and that gives us some of the parameters for that opportunity. So this trade, not looking for a big target, but up to 142.42. That's based on how a scenario, a type of opportunity like this would typically move. Okay. So let's think about that as an opportunity, and let's think about what I like and what I don't like as a trade. Now, based on the stats and not looking at this in trade individually, that's what this system and that's what past movement would suggest this market is most likely to do. So with a stop loss, with a take profit, and based on those levels and risking 2% of your account, that will be the stake size, right? So that's what the tool is designed for, based on what the market is most likely to do, based on historic price movement and performance of that type of trade. Now, this is where as a trader, now I could just move on now, but actually what I like to do is say, okay, well, what are the next stages? What else could we do or think about here as an individual trader that might make us perhaps more consistent? You know, one of the things about being, say, a golfer, for example, which I do in my spare time, or at least I used to before I had kids, was that if you want to be a good golfer, you know, you can go and swing the club just like anybody else, but the way in which you get better is by looking at what the obstacles are. You think about bunkers, you think about out of bounds, water hazards, and so on. So you think about all these things to determine the best course of action. Trading, it should be exactly the same. You know, we can all go down there and smack the ball as hard as we possibly can. But at some point, you need to think, well, okay, but is there something in the way? Is there something that might prevent this particular opportunity from being a winning trade? And there's a couple of things that we might want to think about. The two things that really jump out at me are, and things that are very easy to spot, by the way, is number one, is there any major resistance in the way? Is there an obstacle in my path? Is there a bunker, a water hazard in my way, if you like, that's going to prevent this trade from getting to my objective? The other alternative scenario is, or the other thing we want to think about, what about economic data? Is there any major economic data that might be an obstacle for the euro or for the Japanese yen as well? We'll come to that one later. Let's first of all have a think about this opportunity and let's just tighten up this chart a little bit. The main thing I want to look at is these dotted lines here. Okay, these are what we call pivot points, and effectively what we're seeing here is a market that is, we're looking to buy it right up at the top. It's a bit like we're going to have a big jump. We're expecting a big jump, but I've got a ceiling about an inch away from the top of my head. Now I could burst straight through that ceiling, but actually probably the more likely scenario is that my head's going to hit the top of the ceiling, I'm going to hurt myself, and I'm going to come crashing back down to the floor. So this is the sort of thing that we need to think about. So when you see resistance, you need to think about what's the reaction to that resistance been in the past. Okay, now for a computer system, for a rules-based strategy, very hard to look at things like support and resistance. This is something, a little bit of extra color that we can do. If I just tighten the chart up a little bit, what I can see here, and again, it all starts from there, 142.40. This is the key price from which the market fell there. Notice how it stopped prices here a couple of weeks later. It also stopped prices here again a couple of weeks later. Notice again how it stopped prices here, and here we are finding that same thing happening yesterday, or on Monday, which is yesterday, of course, and it's actually already started to happen today. We've kind of look up and we've come back down again. Think, if you will, of that game Whack-A-Mole. You know what it is? Google it if you want to. It's the game where it's an arcade game, and you get these moles coming out of the ground on this thing. You get a hammer, you put your pound in, and you've got to whack the heads of the mole every time the heads pop up. smack it back down again. And what's happening there is the same sort of principle. The head of the critter or whatever it is sticking its head up, but the sellers are smashing it back down with a mallet again. Every time it's going to that 142.40, it's getting whacked back down. And at the moment, we're in a situation where we've already seen price hit that level and start to find resistance. Like I said, I'm sort of going with lots of different analogies, but I think it helps to try and visualize things, is that the market is actually at a point where we are literally about to jump as high as we possibly can, with the ceiling, a concrete ceiling 1 inch above our head. To me, that is an obstacle that makes this a much higher risk trade. Now, don't get me wrong, I could have been working on leg day a lot, and I might want to be able to smash straight through that ceiling, but actually what it represents is a lower probability, a higher risk trading opportunity. Okay, so everyone, does that make sense? And can you see where we're going with that? Give us a quick yes or a no in the questions box. You can see visually, this is a very clear example actually that we've got here. It's not always quite as clear as that, but hopefully you can see the principle really of it. So what does this mean to me? Really, it means that I'm not a great fan of this trading opportunity, and whilst it meets the rules of a trading opportunity, and it will go in our track record as a valid trading opportunity, why? Because it's got a sniper disc, the stops are an acceptable enough distance away, and so on. It is something that me, having a bit of experience, would suggest that this might be a riskier trade. Okay, so like I said, let me know, give us a quick yes or no, make sure we're all on the same page. That'd be great. Okay. Okay, Gary, quick question on something else. So, hi Adrian, moving on to the sniper accelerator system, I only use FX. This is what your results are based on. Is this correct? Yes, that is correct. The results are just on Forex. And the reason for that is because the sort of the price differences and so on, the speed in which markets move are very different on indices and commodities than they are on Forex. We just tried to keep it a bit more consistent on that basis. Indices and commodities, of course, you can trade with the accelerator as well. All right. Good. Okay. Well, hopefully that making sense. No one's saying anything, so hopefully I'm not sitting here talking to myself. But that'll be that's if I am, so be it. Let's move on. So that's euro dollar. Oh, the other thing, by the way, that we want to look at is things like economic data. All right. So when you think about trading end of day, it's a good idea to have a look at something like an economic calendar. So what you're looking there is, again, an obstacle, something that might get in the way. And think of it in this way. I heard this once, that the market is more likely to go in the direction it was going until some new information comes to light. Now, what might that information be? Well, the chart can take care of things like support and resistance, overbought, oversold, and so on. We can take care of that. But new information could be from the fundamental side of things, so economic data. Now, when you look at an economic calendar, so this is Forex Factory, which is a pretty good one. There are others available, of course. What you're looking at really for end of day trading, there's loads of high impact data here, which is better for intraday trading, more relevant probably. I think the point I'd make here is that as an end of day trader, if you worried about every single piece of economic data, you'd never really be able to trade, right? So you have to be a little bit more careful, if you like, selective, that's probably a better word, about what you might want to go after. For me, what I look for is interest rate announcements, and I look for something called non-farm employment change. To me, that is a high impact item of data that it could well really get in the way of my trade going on to hit its profit target. So I need to be aware of that. Now, this week, we don't have any central banks reporting, at least not central banks that I'm really that interested in. Now, as far as this trade is concerned, this is the euro against the yen. So if I was going to take this trade, I'll be interested in whether the euro, so the ECB, is got its interest rate statement, or whether the Bank of Japan has got theirs. Okay, so what I can do is I can look at the calendar, and I can go through to next week. I'm only really interested in the next sort of 3 or 4 days, to be honest with you, but there's nothing this week. If I go to next week, the next central bank that I can see that is reporting is the